Okay, good morning. This is the session of the S&P 500 E-minis, or the ES as it's known. I wanted to show you guys how you could use fib projection levels um, uh, to show you where the market's going, or the most likely targets, either upside or downside. And I've got a couple of examples this morning. I just chose these because this was the first movement right before the open. The market started up, and I was in a trading room, and we were all trading. There were some folks trading live, and I wanted to go ahead and get that projection level out and see how well that did. So what I did was I started down here, and when I saw this level here, and I'll draw a little box around it. When I saw this level here, um, that was basically retracement, and we started. Here's the bottom of that move right down here. So when I saw this pullback right here, what I did was I went ahead and pulled a fib. Basically, I'm using the price retracement tool, but you could use the expansion tool if you wanted to. And I've got this thing set up for levels of 25, 50, 75, and 100, and minus 25, minus 50, minus 75, and minus 100. So what I did was I draw a fib from down here at, what is that, 1892.50, up to that retracement level, up to the top of that, right before it retraced, which is 1982, I'm sorry, 1902. Okay, now boom, here we go. So if you'll notice, um, the market pullback, and that's right around a 38.2, somewhere around there. Okay, and I've got a buy arrow here, which was an indicative of the fractal move. If you'll notice those 5 candles there, those 3 candles come down and the 2 candles come up. On the 5th candle, I got a buy signal. So if you would have gone long there, it would have gone all the way up to 1906.75, which is minus 50%. You can see it came right up here. And I was watching that. I was watching in the room live. The first thing I did, I was right around in here. So where I started looking at the trade was was basically right in this point, right about that candle. When I started seeing it move up, I knew that was not going to go back down. It wasn't going to quite go down to that 20 EMA line. So that's when I drove the or I drew the fib projection. Okay, and you'll see it went up to 1902. Let me pull this back a little bit. You'll see it hit 1906.75. At that point, you could have come out of the trade. If you'd have front run that by a tick or two, you would have gotten your target. If you're conservative, you would have just said, okay, well, from here, I'll get in on the pullback right in here somewhere, about 1899.75 or so, and then ridden that up to 1906.75 or thereabouts. You might have front run it, pull back a little bit, and then hit the level. Well, then the next level it hit was that 75%, and then it went up to that. Then it went to the tick to 1911.50, which was that 100% projection. Okay, so that's the way it works basically. So the next one I had some other things I needed to do. So I went off and I heard David in the trading room hollering about something. I can't exactly remember what it was. He was hollering about this move up. So I came back, and of course this is the end of the chart. It's almost 1 o'clock in New York. I saw that it pulled back and then it shot up here. So I thought, well, I'll draw another fib line there. So what I did was I came down here and I got to that fib, which is, what is that? 1904.25. And went to basically the first candle, where you're looking at that, if you, where it peaked out. Okay, you could go here if you wanted to, which was just 1 tick. Okay, but I wanted to go here just because that's the first candle, and then it started pulling back. If you'll notice that, so we put our fib draw there. Now we start looking, and then you start seeing these. You could put it right here if you wanted to. Because then you started seeing red candles. Or you could just put in, here's the first pullback. There was the pullback level right there. And that was that was either, you know, at 1914.25, or you could put it 1914.50. Okay, now what's 50% of that? Hey, 50%, look at that, 50% of that move. It went up, bam, 50% of that move, 1919.25. Actually, it went to then it went to 1919.50 and pulled back. Now it's waffling around. So I expect it to go to 1924.25 sometime. But see, that's how easy this is to do it. All you got to do is put your levels at, as you can see, you've got 25, 50, 75, 100%, and then minus 25, minus 50, minus 75, minus 100, and then put your bottom, start your price retracement or expansion, whatever you want to call it, right at the bottom of that move, and then go up to the top right before, you know, when it at the end of that move, when it pulls back. And this is an obvious pullback, you know. Price ran up there, and then see where it goes, and then see what the expansion. And most of the time, it will go to, you know, you'll be able to put your, you know, if you're trading two contracts, you'll be able to put your targets at these particular price levels at the 25 and the 50% level. You could have had two contracts get in at the pullback. Here's your first target here at 1916.75. Take one contract off. You could move your stop to break even if you wanted to, and then it would have taken you out down here. Or you could have just left it at your open, or moved it up here, moved it to 1914.25. That way you would have made some profit, you know, regardless of what happened. Okay, if you got in at that, say for example at that 12.5%, and I can add that. Let me add 12 point, that would be, yes. Let me add a 12.5% in there. Okay, so if you had got in at this 12.5% level right there, okay, when it pulled back, or even at the bottom of that and it started anywhere around here, okay, then move your stop. Once you got filled up here at 25%, put your stop at 0. Okay, at the top of that swing, and then follow it right back up. You've got a really nice trade. You've got a no loss trade, and it's really nice. As you see now, additionally, as you'll see over here, you've got a bunch of orders sitting up at 1920. So what's happening is that the market's trying to push up to that level. They're trying to use this as a magnet to draw that stuff up to that level. And now it's starting to drop. But see that? See it right there? See the paleness of those lines, and see where that's pulling back? That's the 10 EMA and the 20 EMA. What that basically is saying is that's chop. That's chop what that is right there. So now it's pulling back. Okay, it could pull back to this 50 EMA. I expect it to pull back to that 50 EMA. The tick count is strongly in the negative. It usually comes back and taps that 50. It'll tap that 50 EMA, and then, or go a little bit beyond it and then go back up. It might pull back to that minus 25% level. But you can see there's a bunch of orders now down at excuse me, down at 1916 that's pulling the market down. So it's pulling it down. They'll probably get to about 1916.25, and then all those orders will magically disappear, and then the market will spring back up. So they're pulling it back. They're pulling it down to either fill orders or take out long stops, one of the two. So anyway, that's the way I'm reading the market, and that's the way I'm drawing my my fibs. You guys have an absolutely great trading day.